And welcome to everyone. Welcome to this discovery webinar surrounding the Kenyan fintech ecosystem. So my name is Mareme ATAYI, and I work as a Senior International Institutions Manager within the EuroQuity teams of the French Public Investment Bank, also known as BPI. And I'll have the pleasure of moderating today's session. So maybe before we start our discussion and that we hear from our panelists, I just wanted to take a time to maybe present the Africa and France entrepreneurs community for those of you that are participating for the first time in these types of sessions. So we are a governmental initiative, a state-owned initiative that gathers all of the French public operators. So alongside Bpifrance, you also have Business you have the French Development Agency group, agencies such as Digital Africa, Proparco, AFD. You also have the network of French embassies in Africa, as well as the network of the French Chambers of Commerce and Industry. And so this initiative is essentially a demand that came from our entrepreneurs that wanted to, first of all, have an interface where they could interact and meet other companies, whether French or African, to start some partnerships. And then the second aim of this initiative, and today's session shows it quite well, is to have a lot of knowledge sharing between institutions, between our partner institutions, and obviously amongst our entrepreneurs. So going back to today's session, specifically, the aim and the idea is going to be the same as all of the sessions that we have already had. The first part of the session will be dedicated to our panelists, so hearing our panelists out on their takes on the fintech ecosystem in Kenya. And then the second part of the session will be dedicated to Q&As. So you can already feel free to start putting your questions into the chat, and then we'll make sure to address them once our panelists are done with their presentation. So without further ado, it is my pleasure to welcome today our speakers. So representing Melanin Kapital, we have Melanin Kapital. Thank you so much for being with us, Melanin. Representing Qhala, we have Anne Salim. Thank you very much, Anne, as well. And then we also have two startups. So the first one is Asilimia, represented by Tech1 Mwendwa. Thank you very much for being here with us, Tech1. And last but not least, Wangu Gisheru, representing VunaPay. So I think that here you have a very solid panel with a bunch of experts. And then I wanted also to thank the team of the French Tech in Nairobi, represented here by Michael, also for orchestrating with us this webinar. Now that this is said, Melanie, I'm going to leave you the floor. If you could talk to us a little bit more about Melanin Kapital, and then by the same occasion, if you can share your takes on this sector, this blooming sector in Kenya, that would be awesome.
Super. Thank you so much. And thank you again for the invitation. It's really a pleasure to be in this webinar. So I'm going to just start sharing my screen. Please let me know if you can see it. I'll tell you a little bit more about Melanin Kapital, and then I'll tell you a bit about the fintech sector, or at least how we've been experiencing it at Melanin Kapital. So essentially, Melanin Kapital, our vision is to become the first carbon neobank for SMEs in Africa. The reason, and many startups today will be talking about this, on how it's been very difficult for SMEs and most entrepreneurs to access financing on our continent, and the reason why we're trying to innovate to reimagine banking in Africa. We started initially more as a crowd lending platform. We pivoted multiple times. So starting in 2021, it was more a digital lending platform, which we then partnered more with banks to provide access to finance, so that we were focusing a little bit more on more medium side of the SMEs. We saw very fast that banks were not lending themselves, so we pivoted in 2022 and 2023, getting our own facilities to lend, and also focusing more into the green space, where we thought that there was a niche that was not fully fully exploited currently in the African market. After 2023, now we've been able to scale. We now have $1.5 million loan book and have a partnership with EcoBank, so that we can be able to also offer accounts on top of the lending that we do. So we've been backed by VCs like Techstars, Emergo Africa. We got also like some development finance institutions like GIZ, who provided most of our loan book, and KfW. The problem that we're trying to address, again, is the issue of small businesses not being able to access loans due to the cost of capital and the fact that they don't meet most of the criteria of the bank. The opportunity that we found out is that with carbon credits, we could have the opportunity to access financing that is collateral free, and that could essentially come almost as a grant, but not a grant, because you're actually having an offtake contract that can reduce the cost of capital and create more revenue streams. And we believe that a lot of micro businesses could actually benefit from this across the agricultural value chain, be it the farmers, the logistic drivers who could use EVs, and the market traders who could use solar devices. So we built a platform that has 3 core technologies. The first one is the lending management system, which automates essentially the loan process from KYC, KYB, credit score, disbursements, repayments, and accounting reconciliation. Our core innovation on the carbon side is that we have a digital monitoring, reporting, and verification system, which we are now finalizing with Gold Standards and Vera. So what it does is that it can be plugged to any IoT device of solar or EV devices, and it calculates the carbon that has been saved based on the Vera methodology. And because of the connection with Vera, then we can automatically certify the companies. So it will cut down the process of a company looking to be certified for carbon credits from 2 years to basically like a couple of minutes. So that's the big innovation that we've been working on for the past 2 years, and which takes a lot of time because of all the stakeholders we have. And finally, we have an automated way of providing these carbon credits by providing it on the wallet to the farmers, who would then save a very small amount of carbon credits, so they can't necessarily like be certified themselves, but because they're in the value chain, we're giving them a wallet that rewards them. So we're the first digital carbon credit platform here in Kenya, but able to operate in the 36 markets of EcoBank, thanks to the partnership we have with them. Our particularity is that we try to be low interest due to the funding that we have, blending carbon, local banks funding, and DFI funding. In terms of the offering, I'll explain a little bit deeper, but essentially we focus on companies that have a high carbon credits potential. So that means any company that works in the clean tech space, the agricultural space, and the green manufacturing space. We focus a lot more on receivable financing when it comes to loans. And then now we have these new products on carbon certification and carbon trading. And as you can see on the left, you have this platform that basically automates this process for the SMEs. For now, most of our SMEs, like let's say a solar company, most of the time they sell their products on credit to farmers, market traders, and so on. So now what we're launching next year is the individual or the personal account offering that will only be mobile-based, and where those farmers can have our wallet and basically repay the loans of our clean tech companies that we financed on these apps. So The way that it is structured is that if you look at where we are at Melanin Capital, we raise different type of funding from development finance institutions, local banks to get local currency fundings, carbon credits, and then we use this funding to finance those high carbon credit potential companies, so clean techs and agricultural companies, and then they can sell their products on credits through our wallets to those micro businesses. And the way it works like a little bit live, if you look at the value chain of fresh produce, for instance, when you have the farmer, the cooperatives, and then the different off-takers, be it informal for market traders or street cookers, or formal like supermarkets or hotels, what we do is that we analyze all the CO2 that can happen in this value chain. So for the farmer, it's mostly at irrigation and fertilizer level. For the logistics, of course, it's the vehicles. And then for the aggregators and the off-takers, it's mostly based on the energy use for cold chain or for cooking. So then what our goal here is for us to make sure that we can finance the solar irrigation, the bio fertilizer for the farmer, the electric vehicles for the logistics, and the solar devices for the aggregators and the off-takers. So we finance essentially the companies that distribute those technologies, and then they sell on credits to those different actors. This allows us to not have direct exposure to those micro businesses, and also to work with companies that are larger and could essentially qualify for carbon credits. This way we can certify them with the Vera certification for carbon credits, and then sell it and redistribute throughout the value chain. So that's basically the whole model. The advantage is that we reduce risk significantly with this model. We are able to build a certain track record and then diversify the amount of financing that we can offer those companies. So we can then start with other products like invoice discounting and asset financing. And over time, the cost of loan reduces. So far, as I mentioned, we have around $1.5 million loan book across 7 African markets with only 2% NPL, and we are now scaling to $5 million next year. We have like a key focus, of course, on carbon reduction, but also a gender focus, since we are getting now the 2X certification for gender equality. And the key sectors that we're looking at are obviously renewable energy, agriculture, circular economy, and mobility. So yeah, maybe in terms of the team. So we are a team of 10 based in Kenya and now expanding into Senegal with basically 3 main departments, which are credit, finance and admin, and technology. Maybe just to finish on what is our vision is basically to build the largest green bank in the African continent, which would be fully digital and focusing on our communities. So that is for Melanin Capital, just in short, and maybe a few words about the sector and how it was for us to work and build this business. It took quite some time for us to fully understand how we could position ourselves. I think there is a big need when it comes to getting access to finance in East Africa in general and in Kenya in particular. The issue is that you get into a market where there is a lot of loan offering from a personal perspective. So you can see that some of the farmers, at least on a personal level, are over indebted. So it's becoming a little bit hard when you come into the market to understand how you can limit your NPLs but still grow as sustainably. So one key things that we had to find first is our niche and understand how we can be the best at a specific customer segment, which can be a little bit sometimes contradictory to what your VCs will tell you, because they want to see growth and they want to see huge market potential very fast. But it's very easy to diversify once you have your niche and that your system is really, really, really well done. Then finally, I would end by the technology aspect of things. I think Kenya has a fantastic talent pool. It is difficult to find a place where there is more tech talent, but the issues that we have is infrastructure. So like as a fintech, and when you do loans, you'll have to like do a lot of payment transfers, disbursements, and so on. A lot of those rails or like those infrastructures are very monopolistic. So either Safaricom is owning it fully, or then you can use PesaPal or Cellulant, but all those integrations take a lot of time. And all this time that you waste is money that you lose. So I would say that as you come into the market, be very humble in the type of tech that you are looking to build something very basic, very easy. I think at the beginning, I was trying to do everything at once and it was very complex and we lost a lot of time and we spent quite a lot of money in trying to build something that was way too complicated. The simpler, the better, so that you can just get started, get to learn, get to understand your customers, and from there it's easier to scale. So yeah, I think I'm sorry I took a lot of time, I think.
It's okay. It's okay.
Yeah.
It was perfect. Not only was it super interesting hearing about like, the model that you have with Melanin Capital, but I really enjoyed also the transparency, that you were giving with and to the entrepreneurs. So we have a little survey coming up on the screen just to have some entrepreneurs say if they want to be put in relation with Melanie. And then of course Melanie was first going to run by the profiles by you before introducing you, but please feel free to answer the survey, and then maybe to complete what has been said with the presentation of Melanie, I'd like to call to the floor Anne Salim from Qhala, not only to present what is Qhala doing, but then also like Melanie has done, to also share your takes or your advices. That would be awesome. And entrepreneurs, please feel free to ask your questions in the chat, and then we're gonna address them to all of our speakers after. You now have the floor, Anne. Oh, your mic is off. But yes, we can see your screen. We just can't hear you.
Perfect. Good afternoon, everybody, and it's a pleasure to meet you all. I hope you're having a good day, whatever time of day it is in your end of the time zones. My name is Anne Salim, and what I do at Qhala is I lead innovation and product development. I work as a senior product manager, but I also work as the head of innovation. And my work, it sits at the intersection of technology, emerging talent, and the development of secure human-centered design solutions for Africa. So you might be wondering what it is that we do at Qhala. And what we like to say in summary is we like to help governments, organizations, startups, and NGOs, and any different type of company strengthen their digital capabilities. And we do this not just by building products, but by ensuring that they are secure, scalable, and designed for real users. So really quickly, I'll come to my slide. Qhala comes from a Zulu word, which means to launch or to ignite. And this is like a matchstick that's lit. And we pronounce it just the same way you pronounce the word Qhala, but in black and white. Our mission is to connect 100 million Africans to digital tools, driving innovation and growth. And we're doing this in Africa and beyond. And we do it through catalyzing, then researching, and then building. So a lot of our processes are embedded around first trying to understand what someone is trying to solve for. And then we do a little bit of research just to refine the understanding we've gained. And then we build solutions and we bring them to the market. We are a team of young problem solvers, and we are passionate about Africa's digital transformation. And you can experience our work if you've seen us on social media through either products, services, convenings, experiences, or changing of business models. Today's conversation is quite exciting because it sits right squarely at my work in innovation management. And just in quick summary, Qhala does a lot of things, and I just picked the one that I work on the most, which is innovation management. And a lot of my work is helping with process thinking, design thinking, prototyping, market validation, and system refinement. So in terms of capability for the organization, we do a lot of assessment with different companies we work for, just to help them understand. So we call it discovery processes, where we go in and we just sit and say, tell us about your problems. And then we help you think through all the different user journeys. And we come up with a summary that can help you identify priority areas that you can provide a digital intervention to. Other things I do is innovation management and startup management. So this is where I do linkages between corporates and startups, where we have a bias to corporates, where we work with corporates and they tell us their issues, and then we try and match them with suitable startups from across Africa. We started that project in 2021. It was called iHelix, and we've done it in 2 countries, in Kenya and Rwanda. We also build products for corporates and startups and governments, and we run a lot of innovation workshops and hackathons, and we've worked with a ton of organizations. So something I'm very excited about is Kenya's fintech success. And you might think about it, what makes Kenya's fintech success story very popular? When you think about it, the real story is what happens when startups and large corporates build together. So we're seeing a lot of progression in the regulation. Then we're seeing a lot of focus on mobile fast, where because a lot of the consumers from across Africa, they fast interact with the internet from their mobile devices. And then we're seeing a lot of intentionality, especially now between corporates and startups. In Qhala, I'm very happy to say we've worked with some of the top companies like the insurtechs and the airlines, and we sit exactly at that intersection. Really quickly around the topic of the day, what exactly is it that makes corporates excited about working with startups? And I want to spend a little bit of time just doing a high-level summary. I'll share 3 practical collaboration models that I'm seeing working in Kenya today. One is problem-led innovation, and this is very different from demo days. So some of the best collaborations we're seeing are when a real corporate pain point, and this is not just a generic innovation challenge, is addressed. If you look at banks, for example, they're asking, how do we onboard customers faster while staying compliant? If you look at insurers, they're asking, how do we price risk better using alternative data? Or airlines could be asking, how do we embed financial services into travel journeys? You as a startup, if you're in the audience, you would benefit and win by making by solving the specific budget-backed problem. So your innovation will definitely fail when if you meet a corporate and they say, bring us the ideas instead of help us fix this, you will find in the conversation, your conversations are lagging. So a second area we've seen that works really well is venture building and pilots with clear commercial pathways. So we're moving away from the traditional process of procurement, long procurement processes, and we're moving into people want to show pilots within 12 to 16 weeks. That's like 3 to 4 months, and they want to be able to quickly identify clear success metrics, or have internal products with product owners, or a defined path to scale. So what we're doing here at Qhala is we're acting as a translator. On one hand, we're helping the corporate refine what problem they really want to solve for. And then on the other hand, we're working with the startups to understand the corporate realities and to help. And then we're helping both parties move together at speed. We used to call it being a midwife in the iHelix project, because on one hand, the corporate has trust issues, but on the other hand, the startup really needs the agility and the distribution networks that the corporates bring in. And my examples will largely focus on the corporate to startup journey, because that's where I've spent a lot of my time working in. And to make this marriage process work seamlessly, something we learned was it's a lot of iteration. It's a lot of bringing them together. It's a lot of showcasing what is available, but also having a speedy response from the corporate end, such that when the startup is sending the feedback, the corporate is also responding in a timely manner for things to keep moving within the short pilot windows. Finally, what we're seeing also is corporate venture capital as a strategic capital. A lot of corporates have innovation departments and budgets, and what they're trying to do is not just invest, but invest for returns. So they're looking, of course, to use their agility with large distribution, or maybe if they have large data, or if they're looking for different collaboration integrations. Some of them do have tech departments in-house, but when we're trying to make them collaborate with startups, where we're trying to show them the benefit of working with someone who is either bringing in a tool to come and optimize your processes, or someone who can help you make sense of your data. So there's a lot of startups right now, especially AI startups, that are helping optimize data problems in short time spans. And then together we're building large new business models. So a new business model could look like thinking around, let me look at one that we've done recently, where you're building a product together. So the costs for building are shared between the corporate and the startup, and then the revenues and the profits are distributed after you pay the upfront costs. So the question you should be asking is not should we invest, but really what is the strategic advantage that me as a corporate working with this startup, what strategic advantage can we unlock together? Yep. So I'll tell you a little bit about iHelix, which is one of my favorite projects. And it really is a method. We started with open innovation, where we wanted to do just the general design thinking principles. But then after, we kept refining it. So the process was such that we reach out to a corporate, we invite them to participate in the program. We invite and we tell them we just need a 2-hour discovery session with you, where we can talk through some of the challenge areas that you're facing in your company. Then us as Qhala would go back and refine those challenge areas. And then we would source relevant startups from across the markets who are solving for those problems. And then we would set up matching meetings where the startups could present their solutions. And then after a couple of, this matching would be either one meeting or multiple meetings. And then after a couple of solutions, then we would get to the deal making. And the deal making here is deciding, are we going to work together in the form of either a short pilot first to prove the concept, or a larger process. And we've done this successfully. In this project, we helped one of the large insurers work with a travel agency to provide every ticket, that every tour travel option the travel agency sells is insured. So when we helped them do that, then they were making a lot of money. And then once the insurer learned that we could do all these things, then we build a bigger model for them to operate with startups at scale. I'm taking so long, so I'll skip those slides. I just want to really wrap up on this topic. Is Kenya's fintech is unique because first we have a really big mobile money as an infrastructure, and then we have a lot of corporate openness to co-creation, and finally we have a lot of talent, as one of the previous speakers said. So my advice going forward is we need to figure out together, either you as from a startup POV, to learn how corporates buy and not just how they innovate, and then from a corporate POV to learn how innovation, budgeting, and leadership works, and then to start small but design for scale. Yeah, I want to pause there, and I'll definitely come back to answer any more questions. Back to you.
Thank you very much, Anne. So what's the key element that I really take as an advice, and it was also good hearing you on the different examples of open innovation that you have, but what I take from what you're saying is really to encourage, and you're also showing your expertise in doing so, but encouraging corporates to collaborate with startups on this matter. So whether you're a startup or a French corporate or an African corporate, if you would like an introduction to Qhala, please feel free to answer the poll, and then yes, we'll get back to you, Anne, because I have a couple of questions also that I wanted to ask. But we still have 2 presentations left, and now that we've heard also from like a overall perspective of the fintech landscape, we can now deep dive even more into it with the 2 startups that we have. So I'm going to call Tech One Mwenda, representing Asilimia. Tech One, if you can hear us, and I don't know, maybe share your screen.
Hello, I don't know if you guys can hear me.
Yes, we can hear you and we can see you.
Great. Let me just share my screen.
In the meantime, entrepreneurs, if you have any questions, feel free to ask them. So now we can't see you and we can't hear you anymore. Take one. Maybe while take one is getting sorted on this. Maybe Wangu, would you want to present VunaPay?
Yes, I would.
Okay,
So
awesome.
let me share my screen.
Yes, thank you.
Good afternoon, everyone. Hope you're doing well. My name is Wangu Gisharu, Head of Finance from VunaPay, and I'll start by posing a question where, can you imagine that majority of those people who feed us are the last to be paid? They're the last of the food chain, they're the poorest in the economy. And I'm guessing you're asking yourself, who are these people? These are the farmers. In our organization, we have a phrase that goes, let the farmer be the center of all conversations. And this phrase stems up from a story where you have an uncle or an auntie who lives in the village, whose hands are never idle and their livelihood is entirely dependent on the farm. So every planting season, they tend to their crops with care and harvest with hope for a better return, better sustainable income. But yet this uncle or this auntie keeps on calling and borrowing 5,000, 10,000 just to meet their basic needs.
I'm so sorry to stop you, Wangu. We still can't see your screen. I don't know if you were sharing it.
Okay, let me share it.
Yeah.
Sorry about that.
Oh, it's all fine.
Okay, 1 minute. Can you see it?
It's loading. It's loading if you, yeah, now we're on it. Okay, that's good.
Okay, yes. So the question we keep on asking ourselves is, where is the money going to? What is the challenge? This is not just a story for this uncle or this auntie. It's a story across millions of smallholder farmers across Africa. They work hard, they produce abundantly, but unfortunately they're trapped in this cycle of delayed income, or they sell out their 70% value of their produce to the middlemen, or better yet, dependency on Qhala loans. So through my presentation, I'm going to share the who is VunaPay. I'm going to share the why, what is the pain point that VunaPay is trying to solve, and I'm going to share the how it's solving it and the impact that it has had so far. So who is VunaPay? VunaPay is a startup organization at the intersection of farmers, financiers, and partners, with the sole aim to empower the farmer, their livelihood, and enable them to have a sustainable income. So what's its aim? Is to build a digital infrastructure powering resilient farmers. For the how, for the why, I will share it in two aspects. So let's dive into how the agricultural landscape is in Africa. 70% of Africans are smallhold farmers, out of which 50% sell their produce through cooperative, which is a good thing. Unfortunately, you find out that even in that landscape, the farmer is still the poorest of them all. So Africa's GDP, 30% is reliant on agriculture, of which 80% of it is smallholders. The same 80, out of them, it's 50% are selling their goods through cooperatives, but yet they're living on a less than $1.25 a day. So where is the challenge? The challenge comes in from delayed payments. We have different industries within the agri sector. So you have like the coffee industry, where you have 6 to 12 months of delayed payments. And then you have situations where, because of the delayed payments and they're having recurring expenditure, they'll opt to take up loans, from Fuliza to Shylock loans or predatory loans, which have a very high interest rate. And if that's not the case, they opt to sell their goods through the middlemen, hence losing 70% of their value. So this is an opportunity as VunaPay we saw to digitize the corporate movement to reach their farmers at scale. In the Sub-Sahara alone, we have 54,000 cooperatives, each cooperative having
500 to 10,000 farmers. So in a landscape, all of it's like 80 million smallhold farmers who you're empowering, who you're reaching, who you're enabling their have a sustainable income and improving their livelihood. So what VunaPay does, it facilitates an instant payment through cooperative management system with the last payment link to the farmer. What it's trying to do is to create an instant and fair income while laying out the digital rails to the smallhold farmers. So how does it do it? It does it through when the farmer gets their produce and takes them to the cooperative. They deliver it, and immediately at real time, the data is the produce collected is recorded. Once it's recorded, the farmer can go ahead and request for an advance against their produce. They are paid instantly through the financiers, and at the end of the season, the financiers deduct what they paid in advance. So the credit default risk is minimal. So far, we have serving, within the 2 years, we have onboarded 134 plus cooperatives with 120,000 farmers. And so far, we have 2 financiers and other partners on board. What are we trying to achieve? We are trying to achieve resilience through our digital rails, because agriculture sector is one of the biggest sector across Africa. We are trying to leverage on the proprietary farmer data and last payment links by ensuring that you're onboarding partners who are strategic, who are adding value, driving impact and revenue, as well as building resilient farmers. So far, we have won numerous awards, and we're hoping to win more as we scale up. I believe that's the end of the presentation. Our catalyst is to dignify farming livelihood. My take in the fintech economy and ecosystem in Kenya, once it's one of those catalysts, especially if you have a pinpoint that's affecting the common man, you're able to scale it up at a really high speed. What am I saying? I'm saying, look at agriculture sector. Agriculture sector is one of the backbones of Africa, yet it's one of the sectors that is not invested as highly as other sectors, yet it contributes a larger percent. So it's a space where for startups, if you want to plug in, be it in value adding such as soil testing, or be it in value adding such as offering fertilizers and any other value adds, you can plug in and still scale up as a startup. The regulation system is progressive, but yet there's certain licensing that is a challenge. The infrastructure is building up, but at a slow pace, because in a market where you're expected to have more than 4 or 5 telcos, we are still relying on the Safaricom, the Cellulant, the Airtel. So there's the reliance of these, you don't have so much leverage, or you're more or less tied. But I believe with how things are going and with the upcoming startups, we have a bright future ahead of us. All we need is to build it together and leverage on each other's strength so as to piggy bank on each other's lessons to make it a grand scale and improve the economy at large. I'll answer the other questions at the end of the presentations from Tech One. Thank you.
Thank you. Thank you so much, Wangu. It was really interesting, not only having an overview of the way that fintechs can also act as transformation actors in agribusiness. And it was also very good also hearing you on your take on the fintech ecosystem, and what you were saying also on infrastructure echoes with what Melanie was saying. And then yes, happy to have our last our last presentation soon. Before moving on to Asilimia, if any of the investors or entrepreneurs into the chat would like to, in the intro with VunaPay, please feel free to answer the poll. And I will now ask Take One to present also the fintech that is Asilimia. Would you mind telling us about what does Asilimia does, and then sharing also your takes on the fintech ecosystem? And then entrepreneurs, following Tech One's presentation, we will now enter some discussions. I have a bunch of questions, but the whole aim is for you guys to have the opportunity to exchange with our experts. So feel free to ask your questions in the chat. Tech One, can you hear us?
Yes, I can. Wangu,
Awesome.
thank you very much for saving me as I figure out the sharing screen part. Hi, everyone. My name is Takwane. I'm one of the co-founders and CEO of Asilimia, but we're currently known as Ledger. I don't know. Let me just share my screen right now. Great.
And I'm so sorry for mispronouncing your name. Tekwane.
No problem whatsoever. No problem. Ledger is a super app that helps MSMEs, or rather what are known the sector that is known as informal businesses, to be able to digitize and formalize how they run their business. So Ledger started out as very simple and easy to use mobile application where MSMEs could stop using pen and paper to keep track of their business, to using a digital application. And starting from that particular point, businesses, and so far we've been able to process over $5 million in payments. We've been able to do $3 million loans and at a 3% default rate. The problem, so businesses.
The sound isn't that good, Tekwane. Maybe you can cut your camera so that we can make sure that we hear you well.
Okay, sorry for that. Is this better? Can you hear me?
Yes, yes,
better
now
now?
it's better. Yeah, it's awesome. Oh, I think I spoke too fast.
Kenya, can you? Sorry, can you now?
Yes, now we can.
Hello?
Yeah.
So saying that across Kenya and most of African countries, 80% of the economy is driven by micro businesses that are the ones that deliver the services and products that the market gets to consume and enjoy. So so what we try to solve for them is that one, they'll always work with pieces of paper to just figure out how their business is doing, whether they're making profits, losses, if they have debt, and who owes the money. And so digitize that process. And also, with the advent of digital payment infrastructure, we saw it had two problems. One, it was very expensive to use, and also it was very more digital infrastructure that didn't really talk together well. So we helped them use that. So we provide to them an automated digital bookkeeping application and easy and fast digital payment infrastructure. And then on top of the data that they generate, we are able to provide them with loans. And as you can see, Judy is one of our users, where she could only get around about $20 at 40% interest, yet her business does $2,000 in monthly loans. And just because she doesn't have a bank account and she doesn't have formal sales records, she can only get loans from Shylocks. So we're able to move her from that, where we've saved her 90% in her transaction fees, and she's able to get overdraft or operating capital of $200 at an interest rate of 15%. So yeah, so that's who we are. In very simple terms.
It's unfortunate. It's cutting. It's cutting. Can you still hear us, Tekwane? I think that the connection is not going through, but I think that at least we had a clear presentation of what Leja proposes as a fintech, and we were just missing that part where he was going to give us his take on the ecosystem. But it's okay, because what we're going to do is that we're just going to move on to the Q&A part. And Tekwane, feel free to also jump into this discussions. So thank you to all of the speakers for not only sharing more about your respective organizations. Tekwane, I'm just making sure, can you hear us now?
Yes, I can hear you. Can you hear me?
Yes, we can hear you. So you were cut off right before maybe giving us a first glance at your take on fintechs in Kenya for our audience.
Yeah, so I think mine is just to the founders that have come before me have said it quite well. The market is quite huge. There's quite a lot of problems to solve across multiple financial services or verticals. We're very fortunate in Kenya fortunate and unfortunate, as Melanie has mentioned, where we have 90% digital payment penetration. So when it comes to collection of loans, when it comes to, getting paid or collecting notes and coins across the country, that is very easy to do now with a core payment infrastructure such as M-Pesa. As Melanie has said as well, the banks are quite lazy, or they're not really interested in providing capital to businesses, whether it's in the agricultural space or commercial. They currently have a 59% ratio of deposits to loans. A high concentration of their capital is in government paper, and so you're finding that the market is quite starving of capital, where if you look at M-Pesa's number in terms of digital loans provided, they did. Sorry, can you hear me?
Yes.
They did $80 billion in loans in their last financial year. They have over 9 million active customers on the lending part, and we would call them a late entrant in the space. And so that shows us how big the appetite is for capital. So basically the market is quite ripe in terms of scaling of existing solution, and also there's a lot of space for new players and solutions in the market.
Thank you so much, Tekwane. Maybe what I'm gonna ask is for the other speakers, if you could just put back your camera for these final 15 minutes of conversation. So a first question that we had is, I think, in my opinion, quite interesting. Despite raising significant amounts of funding, because as we all know, Kenya is a part of the big fours on the African continent. One of the entrepreneurs would like to know which would be your explanations to understanding why we have yet to see a startup, a unicorn. If you agree with such a statement, that we have yet to see it, please feel free to jump in. I saw you smiling, Anne. Maybe you wanted to share some thoughts. It's an open conversation. The word here is honesty, knowledge sharing, transparency. Yeah.
I think we're close to having unicorns, or we already have them. They've just not declared. Because if we're looking at unicorn from volume of revenue transacted or volume of money income coming in month on month, there's a couple of startups that are at the hundreds of thousands in income per month. The challenge is whether they want to be known. The risk in this market is every time you announce something big from a revenue perspective or from a raise perspective, half the time the next thing that comes really closely is the government is knocking on your door and there's all these compliance checks. But I'd love for the startups in the room maybe to just share some of their experience on that as well. Yeah, so I think they're there. I think they're hiding. That's my personal opinion. But there's a lot of companies that we've seen, especially in our year, this year, working with growth stage startups, and 50% of my portfolio was fintechs. There's a couple of startups definitely who are close to the unicorn mark. Yeah.
Okay, awesome. Wangu, Tekwane, Melanie, would you want to rebuttal or add on that? Yes, of course. Go ahead, Tekwane.
Oh, let me add, from what Salim has said, it's true. Yes, there are unicorns out there, but you do not want to expose yourself, especially where we are in an economy that is really tax different. So you don't want to have these checks that really weren't necessitated if you just kept quiet and were hiding under the rug. And then number two, also from a fundraising perspective, the challenges that you're seeing in this market is the valuation aspect. You'll find a situation where an upcoming company, from the founder's perspective, the valuation is really good, but because they haven't hit the right revenue numbers, it's not treated, or the investors are reluctant. They want to hit a certain revenue numbers. But since they're scaling it up, there's some implementations they need to put in place. Their thought process is good. Their idea can actually translate to money. It needs some time before it starts. So yes, the unicorns are quite there, but for the fundraising aspect, the valuation aspect has been quite a challenge. But it's something that I believe once you get an investor who wants to partner with you, understands the pinpoint that you're trying to solve, they can actually put in money and they can see you scale up. That will be my answer.
Thank you very much. Tikwane, you've had your hand up also for a little while.
Yeah, so in terms of why we're not seeing unicorns in the Kenyan market, I think it's a question of whether the market is building for investors or it's building for what the market needs, right? In terms of the market dynamics, right? So a lot of founders in Kenya tend to be pragmatic in terms of why they're building the business. We have had, payment companies have similar exits to what we saw with Paystack being acquired by Stripe. We had a payment company just recently get acquired by the one of our biggest banks on the same dollar value. But you see, again, the founder didn't raise capital or make headlines on TechCrunch and play the valuation game, right? So I think it's really a question of, if you're building for VCs, then you want the valuation to get to unicorn status so that the VCs that gave you capital at the beginning can cash out at a higher valuation. But if you're building a real business where you want to solve a real problem and make real revenue, then you don't play the game, right? For our instance, we raised $2 million, and out of that, we're able to scale to $5 billion in payments processed. Then the question becomes, do we want to be assessed by the matrix that matter, or do we want to be assessed by matrix that keeps changing depending on the funding climate? So I think Kenya has a lot more pragmatic founders or builders that are more chasing after the problem and building a sustainable business than kind of playing the VC game.
Thank you so much for this response, Tekwane. Maybe Melanie, although it would be interesting to hear your take also on it, there was a question that was specifically addressed to you. So first of all, the entrepreneur, so thanks you for your presentation and for sharing your perspective on green digital banking. And so the question that was addressed was, what types of partnerships I suppose with public development, financial actors or private actors have been the most effective in scaling green finance solutions nationally?
Thanks a lot for the question. And honestly, on the unicorn aspect, I have nothing to add.
Okay.
I think,
Okay.
yeah,
It's been
Wango
covered.
Tekwane have shared a lot. On the DFI, so I think there is a lot more opportunities right now for fintechs to tap into the DFI market, because DFIs are also starting to be a bit tired of like deploying billions of dollars of debt to banks and not getting any traction or any impact out of it. So I've seen that some foundations, for example, the Gates Foundations and the MasterCard Foundation, have started to finance DFIs like African Development Bank and GIZ and African Guarantee Funds, so that those DFIs can finance fintechs. So one very good program that is currently live is called FinRise. It's a MasterCard Foundation program, which is implemented by the African Guarantee Funds, and they're giving $1.5 million of debt at 5% plus a portfolio guarantee of 1.5 million, which is quite rare, because usually it's either you get a guarantee or you get a loan, but you don't get the same part, and it's quite affordable. So those kind of partnerships, I think the African Guarantee Fund is very effective in deploying this. I think GIZ more and more is also deploying more towards fintechs. But then beyond that, I don't see any direct DFI to fintechs thing. The other aspect that you can look into is when DFIs have programs through banks. So for example, currently Kenya Commercial Bank, KCB, is having a program with the Green Climate Fund to finance climate tech and climate fintechs. So now when you know that, then you can approach the banks, even though it tends to be a little bit more, it tends to be a little bit slower, but at least you know that you can fit into a certain programs where it will be more affordable for you to get the debt. So those are the collaborations I would say are the most effective.
Okay. Thank you so much, Melanie. So time is flying, but I did have some questions that I really wanted to ask. I'll try to maybe just narrow it down to two, and I'm glad also that the entrepreneurs are getting answers to the question. The first question that I have is, what lessons from Kenya's fintech journey could be replicated in other African markets, and what should absolutely not be copied? Just so that we can, because like I said, in the audience, we have entrepreneurs really coming from different countries. Yes, Melanie.
Yeah, I'm happy to take this one. So I would say that when you look at the Kenyan market, you can look at very similar markets. Like I find that Nigeria and Uganda have some similarities with Kenya when it comes to the infrastructure. So, for example, they have a credit bureau. They have like APIs with the government for checking national IDs and things like that. So, like there is some kind of similarity on that. They also have like a digital license, for instance. Like they have like a variety of license, as opposed to when you look at the Francophone West African market, where you have almost like two licenses, the bank license, the MFI license, and there is nothing almost in between, right? So I think you can replicate if there is the same public infrastructure, digital public infrastructure, and if you have similar licensing structures. And then, of course, you need to look at the behaviors also of the consumer, right? Because now, for us, for instance, we're starting to lend in Muslim countries. You can't put an interest in Muslim countries, so like you have to really be adapted to the markets. So you can replicate some things that you do in Kenya in other markets if it's similar. What you shouldn't at all replicate, I think, is anything that is related to mobile money and just assuming it's going to work the same. Kenya is extremely particular when it comes to this infrastructure. It's very, very hard to replicate this in other markets. So like, for instance, there are markets we don't go as micro as Kenya, because we don't have the same type of mobile money infrastructure. So that's what I would say on my end, but I'm sure Tekwane and Wang will have other things to add.
Yeah, Wangu and Tekwane, do you want to add? Or I have one last question. Maybe one of you can take the as a follow-up to what Melanie said, and then the rest can maybe ask my next question. Does anybody want to add? Yes.
Okay, let me go. With agri-fintech, one of the main challenges you're experiencing is you're working with cooperatives which have been in existence for a while, and they're using archaic infrastructure. And another thing is them building a trust relationship. They've gotten used to a certain similar way of doing things. Now you're bringing digitization on board. The fear of will my people lose jobs? How will they go ahead and continue with the processes? So there's fear of that. And another thing will be also with agriculture is very pegged to the weather. If it rains, you have a good output. If it doesn't, you don't have a good output. It's also pegged into the pricing of the product. I'll give an example like coffee. Coffee can be, once it's taken from the farm to the factory and it's sold, the sales might differ from this period to this season. So those are in the agri-fintech, because it's finance meeting agriculture, is one of the challenges. And since we are in the lending business, we are in between the financiers and the farmers. So there is an intersection. We are pegged on the cycle. If the cycle or the payment doesn't happen at the same time you are expecting to repay your financiers, you're met at a deadlock. As Melanie has said, also the customer behavior is very different. You'll find a circle of farmers will be open to adding on different value adds, but a circle of farmers won't be, dependent on their customer behavior, dependent on their experiences. So those are mainly the challenges. For a fintech that is going to any space in fintech, I'll try first understand what is the problem that are you trying to solve, and understand the behavior of the customer. So if it's the loan sector, understand Kenya has had different mobile payment platforms. Some have worked, some have not worked. What were the challenges between the working and not working? And what are the behaviors? Because majority of them is because of default. And how do you plug in? But in terms of being a bedrock, I believe Kenya is a bedrock in terms of, as we call it, Silicon Valley. So yes, I would encourage you to plug in. But as you're plugging in, look for you're adding value to an economy that is starting up for my take here.
Thank you very much, Wangu. So we are now entering the last minutes of the webinar. So last question, if Anne or Tekwane, or actually Wangu and Melanie, if you want to jump back in, but I'll maybe want to hear from them, is I have such a difficulty because I had two questions I really wanted to ask, but if you had to bet on one fintech segment like lending or insurtech or embedded finance, which one would you see as the big next growth driver in Kenya, and why? And then we'll end our session on that.
I'm very excited about embedded finance because, and especially because right now, a lot of businesses, the small and medium businesses, are looking for, is it capital operation expenditure to advance their next sales or their next milestones. And if we can explore further on easier ways for them to access that credit without the friction of getting out of the environment and then coming back to plug in the money back in, that will advance things a lot faster. Maybe I can give an example. So we do a lot of transactions on mobile money. And one of the things that's really good about mobile money, if we look at the overdraft facility we get from one of the large telecos, is you can be at a checkout and then you don't have all the money in place, and then you just really quickly make the transaction, they charge you a fee, and then once you have some income, you put it back in. But when we're looking at embedded finance and specifically in InsurTech, here we're looking at my insurance is about to lapse, maybe my car payment, etc. And maybe the fintech that is supporting that, because they have access to my credit history, they can be able to say, okay, she doesn't have the money right now, but we don't have to cancel her insurance immediately. Let's consider giving her like some level of overdraft within the system, so that then the inconveniences that come with service disruptions can be reduced or minimized. It'll definitely, of course, require a lot of research to get it in place. And I'm very happy that we have some large insurers in the country who have sandboxes where we can pilot some of those solutions. And the next one for me, of course, is the cross-border payments, which everybody is trying to crack. I'll pause there and maybe let the others speak. Thanks.
Thank you. Tekwane, would you want to share your take on this question? Have we maybe lost Tekwane? But it's a fascinating discussion, and truly I would have loved to have so much more time to go into details, whether on, the impact of your activities, Wangu and Melanie, maybe having better understanding of how do you go about measuring this. And it would have been also really interesting to deep dive even more into the question of open innovation, because within the community, I didn't mention it, but we have about 630 entrepreneurs coming both from France, coming from 41 African countries and more than 20 sectors. But I feel like this was such an interesting session. So all that is left for me to do is just to thank you so much for your availability. Thank you for sharing your insight. Thank you for exchanging with our entrepreneurs, and then to our entrepreneurs, this is the last webinar of the year. So we will be starting our new series of African French entrepreneurs webinars by mid-January. So do stay tuned, and we will be talking next about clean tech in South Africa. So once again, thank you so much, everyone. We will be following through with your connection demands as soon as we run it first with our panelists to make sure that it's okay. And have a lovely afternoon. And yes, see you next year.
Thank you so much. Bye.
Thank you. Bye-bye.
Bye-bye.
Bye-bye. Thank you. Yes.